Good morning, everyone, and welcome to the Morning Edge webinar. We're not seeing much action today. It's just really a consolidative move for the most part. So yesterday we started from ground zero and did the bias chart from scratch, essentially. Today there's really nothing to speak of. We'll go over the news, but markets are just basically in the same place we were yesterday. We did see the cable come off. We talked about the 2362 and talking about not very much fumes once we get past that. And they maintained that 2381 area for a while, and someone asked me about it, and I said, well, let's see what they do in Asia, because I probably want to squeeze some Asian traders. And we've gone and eased off from that. So we've gone eased off more than 100 pips. Well, it looks like probably about 120 pips, maybe more than that, from those highs. So it's really basically just holding the people that were short or try to sell this thing on the way up, keeping their feet to the fire into the U.S. close, make them pay a little bit more in Asia, and then from there we ease back. So not really a whole lot, but it's been a relatively quiet session. We're just going to spend the whole first half hour just going over news. Just get a little bit of a tone. There is no action, like I said, other than the cable pulling back. Bonds have eased back a little bit. Gold's still holding steady. Did pull back, pop back up. We talked about the 1217 area, and that was very key. I marked that off, and we'll go into that. Other than that, Aussie dollar's hanging near its highs. Dollar yen came into that same area we talked about, that 1288, into that little peak zone, and just came to the bottom of the peak zone and has popped back. That we talked about that being the target. Euro, we talked about 716 being an area that the market would, pull back and have a quote unquote respite. That's exactly what has happened. We had pulled back, like about 35, 40 pips maybe, and we rounded back. We rebounded back to the 716 area and just sat there. Then we pulled back, and that's it. So there's really not a whole lot happening today. We're just going to cover news. Like I said, I'm not going to act like something's there when there's nothing there. So we'll just go on and go over the news. And I don't know about updating the bias chart. I don't think there's anything much to update. We're in the exact same levels that we were yesterday. Bonds have eased back a bit. We talked about them needing to work lower overall, and it looks like they're starting to ease back, which will probably weigh a little bit on gold, but not really that much. Euro's basically trading in a 25 pip range, and really even tighter than that, probably about 18 pip range for about the last couple hours. So we'll go and take a look at the key news stories, and then eventually we'll get to the charts. Then we won't even look at any type of analysis until we get in the first half hour, and we'll just be updating the bias chart. So pound turns around the best day since the 1990s, and we talked about, we came into that area, we rallied, and then our stretch area, I'm not going to say stretch target because I wasn't doing anything or looking at anything per se in the cable at all, but our stretch area was at 2362, and I thought once it got above that, it was just basically running on fumes. Although they kept it keeping on to the into the U.S. close, because anybody that had been short probably was down anywhere from 75 to 125 pips. So they kept those people's feet to the fire, and then held it there in Asia, and then we started pulling back. So this is starting to drop back on Wednesday after marking its biggest one-day gain since at least 1998. On Tuesday, as PMA outlined Britain's hope for its exit from the European Union, with May due to speak again later. Sterling sliced 7/10 off Tuesday's 3% surge against the dollar, leaving it at 23.29. Currently, the cable's at 22.87. Someone asked me where I thought the cable would go to. I just gave them the buy support, which is 22.06. I mean, for right now, you'd be looking at 22.46. But once again, I thought it was just overdone, and people just caught on the wrong side, and they just were not going to let those people out of their short positions until most of them, cried uncle. Asset manager GAM's group head of multi-asset portfolios, Larry Hathaway, said the message had been well received because it sought solutions rather than a confrontational speech. But there remains huge uncertainty over where the talks will lead. I don't think unsustained realities in the pound are likely. My sense is that we are going to challenge the 120 level before too long again, and 115 is not out of the question, but there won't be the kind of weakness that we saw in the second half of last year. I know that Morgan Stanley is still looking for 117 on the pound cable, that is. Britain's Brexit minister said in a radio interview that other EU countries had welcomed May's comments on Tuesday, and then that he and his colleagues would seek a trade deal where the customs arrangements were as frictionless as possible. I think this has been the key phrase. Everybody's talking about, things being frictionless. In line with the day's broader pullback, sterling also dipped 0.5% against the euro to leave it at 86.76 pence. It hit 86.27 on Tuesday. So we'll kick that story off. And we'll go back here. Like I said, we have the euro easing back a bit. We talked about, I think it's 646 on the bias chart for support. I think it was. I'm not sure. Let me take a look. Yeah, 644. I think we have to go down there and do a little bit of homework before we can, we've talked about the market taking a pause at 716. That caught the market basically right to the pip. We eased back. We came back. But I said, I think we'll get to 758 before we see a markedly recognizable correction. And that seems to be playing out so far into fruition. Look like they may try to make a run yesterday or in the Asian session maybe, but we're seeing it ease back a bit. But go over the news. Like I said, the market's in a consolidative mode with the exception of bonds that are easing back. There's no movement in these markets right now. That's what I'm saying. So we did our thorough analysis yesterday. Today is basically going to update to adjust support and resistance by what, 2 or 5 pips maybe. The dollar rebounded on Wednesday after falling for 5 days in a row against its currency basket as investors eyed a speech by the head of the Federal Reserve later in the day as U.S. inflation data for clues on the path of interest rates. After a volatile Tuesday on which sterling rose more than 3% for its best showing against the dollar since at least 1898, currency markets were calmer on Wednesdays, with most of the previous days moves seeing slight reversals. Yeah, that's basically what we just said. Sterling retreated 7/10, the dollar, which hit a 7-week low of 12.57 a yen in early trade in Asia, climbed 0.5% to 13.19. Currently, the dollar ends at 13.36. Our lower portion of that pink zone is 12.55. We see here the low is 12.57. Everything is just a partial reversal of the price action yesterday, says RBC Capital Markets currency strategist Adam Cole. He says dollar's recent weakness had been primarily driven by positioning, which had built up heavily in favor of further dollar gains. It was therefore vulnerable to exaggerated falls on negative news. One of the reasons given for the greenback's weakness was a comment from U.S. President-elect Donald Trump in a weekend newspaper interview in which he said U.S. companies could not compete with China because the dollar was too strong against the yuan, which was killing them. You know I've already mentioned this. I said this for the last nearly 2 weeks, that he was going to go in and say the dollar's too strong and, and that's going to let the dollar go in and, end up pulling back. So this stuff wasn't expected. It's just a matter of when's he going to go in and say it. Now, we didn't know if he'd be like real confrontational, but of course they were going to say, the dollar's too strong. Cole said the comments might have helped to weaken the dollar at the margins, but they had not been a major factor as Trump showed a lack of understanding of currency markets. Well, I've been saying that for a long time. The fact that he talks about China manipulating the currency is just not credible. So that reduces the credibility of what he says about the currency, because it's clearly at odds with anything that's actually happening. Well, like I said, I've mentioned that. I don't say anything more about it, but I've said this 6 months ago. He doesn't understand international finance, so the impacts of it. And and they're basically calling him out right now here. But Junya Tanes, a chief forex strategist at JP Morgan in Tokyo, said that if the U.S. officials further talk down the dollar, it could weaken, and the correlation to the interest rate differentials may end. The dollar surged at the end of 2016 on expectations that fiscal stimulus proposed by Trump will boost growth and inflation and lead to a faster pace of U.S. interest rates. Fed Chair Janet Yellen's speech later on Wednesday to the Commonwealth Club in San Francisco could offer clues about the direction of policy. San Francisco Fed President John Williams said on Tuesday he saw a good case for these rate hikes this year, even without fiscal stimulus. But if the economy accelerated, the Fed would need to raise rates faster. Fed Governor Lael Brainerd on Tuesday joined the chorus of policymakers at the Fed warning of the sustained wider budget deficits could fuel inflation. Investors also awaited the U.S. Consumer Price Index, expected to show inflation at 0.3 last month compared with 0.2 in November. And take a look from overnight. Emerging Asian currencies rose broadly on Wednesday after the dollar was pressured by President-elect Trump's showing concern of the greenback strength. The Thai baht climbed to $35.22 at one point, its highest level in more than 2 months. Onshore yuan hit a high of 684.83 at one point, its strongest level since mid-November. Asian currencies gained a boost as the dollar languished near its lowest level since early December against a basket of 6 major currencies. The sell-off in the dollar deepened on Tuesday after U.S. traders returned from a long weekend and reacted to Trump's weekend comments. In an interview with the Wall Street Journal, Trump said the U.S. companies can't compete with China now because their currency is strong and it's killing us. That gave an added lift to Asian currencies, which have risen this month on the back of a fierce short squeeze in the yuan as the dollar fell after a news conference by Trump last week offered little clarity on the plans of his fiscal stimulus. Says it's going to be very important that he does something around fiscal stimulus, tax cuts, and investment pretty quick. Otherwise, I think the market will get nervous and sell dollars again, Bargman says. A Reuters poll last week showed that market positioning was seen as being long the U.S. dollar against most emerging Asian currencies. And we'll come into gold. Gold slips from 8-week highs on the dollar recovery. Gold has eased back, but we're still hanging around here at this 12.13. We talked about the 12.17 yesterday, and the market couldn't sustain gains beyond that, and we eased back, and then we pulled back up again, and then we in Asia, and that 12.15.30 seems to be pretty key. Gold prices on Wednesday fell from 8-week highs in the previous session as the dollar recovered from lows and investors booked profits ahead of Donald Trump's inauguration as U.S. president later this week. After a quick push from higher around the open, gold succumbed to some profit taking and producer selling throughout the morning. A slight reprieve for the greenback also helped to soften gold and silver. In the previous session, it hit a low of 126, talking about the cash dollar index. Its weakest since December 8, following Trump's comments in the Wall Street Journal. Once Trump takes office, there is some clarity. The focus will come to the fact the Fed is going to hike rates a number of times this year, and that would reduce the appeal of gold as an asset. Jeffrey Halley, senior market analyst at brokerage Orlando in Singapore. Several Fed officials have been making a case for a gradual hike in U.S. interest rates. Fed Chair Janet Yellen will have an opportunity to lay out her thinking with speeches on monetary policy on Wednesday and Thursday this week. High interest rates would reduce demand for non-interest-bearing bullion holdings. Trump's campaign calls on tax cuts and more infrastructure spending have boosted U.S. shares, the dollar, as well as has driven a sell-off in U.S. treasuries, but its protectionist statements and the off-cuff tweets have led many investors to opt for gold instead. Gold, considered a safe haven during times of geopolitical and financial uncertainty, has risen more than 8% since dropping to more than a 10.5-month low in December. Chinese President Xi Jinping offered a vigorous defense of globalization on Tuesday, pushing back against the America First rhetoric of Trump and signaling Beijing's desire to play a big role on the global stage. The extent to which globalization retreats and the mood and sentiment coming out of Davos may impact gold. Clearly, there's enough investor concern to send gold higher. HSBC analyst James Still said in a note. So one guy is saying gold should go lower. That's Halley. Another guy says gold should go higher. This is Steele. So we'll try and take a look at what's coming on tap for today's economic reports. Let's move this here. So we already got German inflation, UK unemployment, Eurozone inflation came in a little bit stronger. Didn't really impact the euro at all. So today we have CPI that's supposed to come in at 0.3. Prior was 0.2. And with the exception of CPI, that's it. Oh yeah, we do have industrial capacity and industrial production and capacity utilization at 9:15 a.m. Eastern time, and then at 10 a.m. Eastern, we do have the Bank of Canada's rate decision. I don't think anybody really cares of what they say at Davos. Those guys and gals are, no one cares what they say. I've seen the Gartman report, and basically it was saying that that was their idea, and I think that's true. Nobody cares about what anybody says at Davos. So we're going to take a look at the charts in general. Like I said, we're not going to do any analysis until we get into the first half hour. There's really nothing happening. These markets are consolidating their moves. So it's going to be a really slow webinar. We already did all the work yesterday. And AB, Walter, Frederick, and Amanda all say good morning. Good morning, guys. So, as I mentioned, you can see here these markets. Nothing's happening. You see, we're just in a very tight range. I mean, nothing's happening here, okay? Same thing here with the Aussie. Look at this, what is it, whopping 20 pips? I mean, we're just in consolidation mode. And we've had a little bounce in the dollar-yen, but there's nothing, same thing here, look at gold. All these markets are basically the same thing. Looks like crude's taking a little bit of a pullback. We haven't really paid much attention to crude. Cable was a bigger mover yesterday as we got past this 2362, and we talked about that being kind of a stretch area. I won't say a target because it wouldn't look at anything in the cable, but it really caught a lot of people flat-footed. I don't know about flat-footed, but people on the wrong side of the market on this. So we'll see CPI report today, and then we have industrial capacity and utilization, industrial production capacity utilization, say, at 9:15 Eastern, as well as Bank of Canada rate decision at 10 a.m. So we'll spend some time looking at the dollar CAD. I think the Reuters are looking about them. I really don't care. I mean, these guys, that when you think they're going to do something, they don't. When they think so, I really don't care what the Bank of Canada does. To be quite honest with you, I'm just going to look at the charts. That's it. I mean, I've seen it before where they take action, the market just goes the opposite direction. I really don't. That's one central bank that I think is just pretty much meaningless for the most part. I don't see anything they have to offer that's going to make anything or change anything. Be quite honest with you, I haven't even seen anybody even remark or comment really about the Bank of Canada. I mean, like I said, one of those, if the tree fell in the woods, would you hear it? If the Bank of Canada takes action, does it really even matter? But here we are in the gold market. We talked about the 1217 yesterday. Remember, there's our marking right there. And we talked about that being key. You see right here, that was the 78% of that range. You see right there for the morning's range. We talked about the synthesis 1217. Got right there, and we just started pulling back. And then we turn around and come right back up again, and then we just can't hold it. But that's where we're at right now. And we've talked about the significance of the 1220. Like I told you before, I think we're going to have to ease back. A lot of people had missed that run up in here. I mean, I'm even shocked it went up here. They were expecting, pull back closer towards 1170. We'll do some work and look at some longer term pullbacks. I think we already did the 38%, which came in at 83. So we'll take a look at that a little bit closer when we get back. Before we go into break real quick, we'll go in and take a look at the bond market, and then we'll grab our break. We talked about the bond market and this 5403 area here, which is the top of this zone. You can see it here clearly on the 4-hour chart. We had the 38% there. I just didn't see where they could make it up here. Again, they were challenging it, but we were talking about how they were going to have to go in and pull back to do some work in here, and we're looking like we're starting to go in and ease back at this point. If you remember, we said our support is going to come in at 52 because we weren't even playing around because we were thinking, hey, look, they're going to have to go in and come back from these levels. So right now, we'll do some more work, but right now it probably doesn't change. But we had our resistance 5403. We got up as high as 53.29, and even though we said it was a little bit wider, I thought it was necessary, which is our support comes in here at 52. And you can see it's just been dripping and dripping and dripping. So it's made sense to bring it down here because we've had this wide range we've been playing in. So we're going to go and take a break now, and we'll be back after the break. And we'll start on the majors at that time. And thanks for joining us here on the WizeTrade webinar.